Hey guys, it is Monday, November the 7th, and we are going to have the elections coming up here pretty soon. Very exciting. And you kind of have like a weird day today in the markets, I would say. Now, it's really strange because typically the elections, I don't remember them really doing much but keeping the market trading flat. We've had so much weird trading activity in the market. Weird isn't really the right word. We're more or less through earnings season. And so a lot of the swapping of things has happened. But let me share my screen and we'll go through approximately what's going on today to set the stage. And then I really want to just go through eBay and Etsy, because it's interesting to me how they reported. And one of the areas that still hasn't reported this quarter is retail, because retail reports late and then reports into kind of trying to get maybe a little bit more on Thanksgiving. So we still have a huge slew of those companies that will start reporting really late next week. There'll be a few, and then so on and so forth. So these two retailers were so fascinating. Let me share my screen and just get into it. Past performance is not indicative of future returns. Here's what we have so far. Let's see. So we have the markets up a bit, NASDAQ down. Let me just confirm, because NASDAQ's been kind of a little bit all over the map. And then the Russell was more or less, so we'll call it NASDAQ flat, and the Russell flat, dancing plus or minus a few bips or so. I think I saw NASDAQ down as much as 25 basis points, but not really anything meaningful, 25, a quarter of a percent. Okay. And then when we look at the map, you've got a few things in the red, the utilities. I'm not even sure what would make the utilities in the red, quite frankly, because you can't really go by energy prices to judge the utilities. You actually have to go by catastrophes, and also there's just so much other junk that goes into utilities that you really like this. This takes real special expertise. It's not even you have to be a strong fundamental analyst. You have to really understand the regulations and the very long history of stories of a lot of these. So this being in the red and being in the red as much as it is doesn't totally faze me. I got to find out what's going on with Dominion. That's crazy, down 10. And then we've got Amazon and Tesla giving it back today, with the rest of the mega caps actually doing the exact opposite. It's really hard to say how to think about all of this. I think it's just limited news flow in front of what people are perceiving will be a big deal with the elections. And so kind of with that, I just want to also mention that CPI will come out on Thursday. That's going to be very relevant, because right now the information in retail, it just doesn't make any sense. Do you know what I mean? We've got some people that are clearly doing well, some others that are not. The trends are kind of all over the map. Some people are making money off of China, some people are not. Some people are making money off of Europe, some people are not. So I think that this is really going to be business by business going into the fourth quarter here, or into the latter part of the third quarter, depending on how you think about it. Okay, we do have a bunch of earnings tomorrow that I care about. Mosaic, Disney will come out, and then a little bit of Senseonics, which I've been very bullish on. But, I've been really shocked, and I should have pulled it over, at how strong corporate earnings have been. And we talked about that in the last episode, a couple of reasons why that might be. And throughout all of this, we've been very positive corporate America, but wow, I would have thought that that a lot more would have not been as profitable as they were. And that's just not the case. Now, let's look at eBay first, because eBay is a little bit of a weaker story. Etsy is a little bit stronger, but there were curiosities in both cases. With eBay, that company, I think, was up fairly high. I mentioned this on the day that it reported. This was not a great earnings report. It wasn't bad. But just to set it up a little bit, the thing with eBay that's so fascinating is that it is currently, I would argue that it's more of a turnaround. And I would argue that because essentially the stock just, the CEO hasn't been there for, in my opinion, particularly long time, but he's been very clear that what he wants to do is try to narrow the business toward a few core areas, of which this quarter, the one that really mattered was trading cards, believe it or not. And then the other ones are like auto parts and stuff like that. It's very random stuff that he's interested in focusing on. And he's literally cool to let the rest of the business not do quite the same. Let's call it that way. And that's an interesting strategy. And in a lot of cases it can work, but I just want to show you, it's not, even though their release said they came in better than expected, best, it was better than they expected. I don't know what the street put in as numbers, but I will say that you still have gross profits down, revenue down quarter over quarter. And operating expenses were flat, so that's not bad, but you're still coming in with an L on the quarter, okay? So let's not be confused that eBay did a great quarter. It did, however, it's still just to give you a sense for the fact that what it looks like when you're trying to wind this business into a smaller, in theory, more profitable business, you do continue to have quarter over quarter, this is every sequential quarter, revenues declining. And so if you don't have really solid operating income pickup to compensate for that, so if I see revenue declining, but I don't see earnings increasing, then from an equity investor's perspective, it makes no sense to give these guys credit. From a private investor's perspective, like if you were in private equities, private markets, stuff like that, knock yourself out. But like, if he's got to actually shrink this business before it becomes interesting to the rest of the world, it's kind of a little bit on the early side from an investment perspective. Now, the fourth quarter, though, if he can get, if he can get a little bit of lift from the fourth quarter, maybe, I don't know, but this isn't the kind of story where I would be like, oh my God, eBay, I'm so excited for you. Let me show you what they guided to, by the way. They're guiding to down for the fourth quarter. So down revenue, down, operating margins, actually slightly down sequentially year over year because they still have some transition work that they have to do. And then earnings, they think they can down 2 in line with what they're saying on operating margins to up 4 if they get a break on taxes. Like, this isn't the kind of thing that makes me like, oh my God, I can't wait to get into eBay here. Even though you might say, oh, well, on earnings, it's interesting. You still got to compare that earnings to some kind of growth rate. So that's eBay right there. Yeah, anyway, Etsy is a totally different story. It actually had a decent quarter, but this impairment charge is a little bit of a curiosity. Let's call it that. Okay. So was it a good quarter? Yes, they did have pretty good top line growth here. You can see it's over 10%, but this goodwill impairment was $1 billion. Okay. It was $1 billion. And it's such an interesting thing to do because it does that impairment is coming off of their acquisitions, Depop and Elo7. Now, I kind of have mixed feelings about how to think about it because on the one hand, it does suggest that they're saying that those were bad acquisitions, okay? However, I love the CFO of Etsy. So my suspicion is the reason she's doing it is to just kind of clear it out and get a cleaner balance sheet, get a cleaner statement, because, you take the impairment and then goodwill looks a certain way. And then more importantly, it does a certain set of things to your tax bill, which is quite nice as well, if you will, right? So that I have mixed feelings how to think about it. The reason I'm also not going to be very negative about the fact that they did this impairment is because cash flow from operations looks great. Like once you add back in the impairment, you can clearly see operating income, cash flow from operations up like 10-ish%, let's call it. So it's not bad. So Etsy is absolutely, you got to think, Amazon didn't make money on its retail business. Etsy did. eBay, that's not really making money, my friends. So that's why, it's really hard to say at these valuations, is Etsy interesting? Maybe. I'm not ready to pile in on it, but it's absolutely on my radar screen for the fourth quarter. And also it gives me pause to be too negative the retailers into the fourth quarter because Etsy doesn't have any of the areas that people are like, oh, that's the only thing people are buying. The one thing it doesn't have is electronics. So there is that aspect, and I didn't preview them. CDW actually had a really strong quarter, really strong, clean as a whistle, great growth top line, brought it down to the bottom line. So it's a really unique, I really think that the retail stuff that comes out is going to be wonderful for the day traders, but also it's anybody's guess at this point. And with that, I'll take any questions. Hey, David.
Hey, May, yeah, Tesla,
yeah, I figured that why Morris kind of peeked his little head in here, but he probably has other things going on. Yeah, I'm a buyer of Tesla, and this is where I think it's awesome that folks that subscribe to Gurula can take the more investor oriented, fundamental oriented approach. I mean, I don't know that you call me deep fundamentals, but I'm definitely more of that approach. And then you can also learn from Richard, who's just this phenomenal day trader. Right now, the trading of this stock is giving opportunity to long-term investors. Okay. So if you're a day trader, that is Richard all day long, and you should absolutely tune into his show first thing in the morning. But if you're an investor currently, if you looked at what happened this last quarter, Tesla is literally the only company that is still growing both revenue and earnings. And yet, on a PE to growth perspective, it's trading at a fraction of that, a fraction. That's why I'm like, where are the fundamental guys? Except that I think they're chicken because we're going into the fourth quarter and it's a question mark. Like, what's going on? Like, can you get out of the way of just the massive rejiggering that people do at the end of the year to set their portfolios up for 2023? But it's cheap, and I got news for people that think they're going to really somehow have a negative growth rate, because that's what's implied if you think that it should trade at such a steep discount into the fourth quarter. The news that I have for you is you're nuts. And that's despite China. First of all, look at how many cars it sells in China versus other locations. Second of all, realize that there are still incentives for people to buy. Third of all, realize they just lowered prices on Tesla in China. And then more importantly, it's Christmas. Sales are good during Christmas for pretty much all the auto manufacturers. So it's a really aggressive bet to think that they're going to have a bad fourth quarter, in my opinion, at this particular moment in time.
Yeah. What are his margins? Tesla's.
I have to double check. I don't have it off the top of my head, but they are significantly higher than both Ford and GM. And it just has to do with, like, he doesn't have much of a marketing budget. Like, he doesn't need to market the same way they do. And also he usually gets, relative to the other auto manufacturers, he does get a premium.
Yeah. Short-term sentiment is such a big thing. Short-term
Sentiment always gives you opportunities on Tesla.
Right.
And if you have missed it over and over again, really realize now that it actually is trading below what I think it traded almost a year ago, right? Because like the implied value of Tesla at 298 on the old pre-split price is under $700 right now.
198.
No, but I mean, like, if you just multiply that by 3, you're under 700. You're actually under $600 at this point, right?
Right.
So that's like way cheap. If you look back at the chart, it's been a while since Tesla's seen that number. And in the years that have come since they've seen that number, they've been added to an index. They've been like, they've gone not just cash flow positive and earnings positive, but massively earnings positive. I mean, they grew earnings at 100% this last quarter. Top line growth was more than 50%, I think 55. So like, this is, I think, let the day traders do what the day traders do. I've never been one to take anything away from that craft. It is a real craft that you really should admire. But if you're like, hey, if I look at my long-term holdings, my IRA that I've had for like 20 years or something, Tesla is not the size that I wish it was, You
mean percentage-wise?
Yeah, percentage-wise. Given where I think the puck is moving in the next year to 2 years.
How much credence do you give tax loss selling? Because if you bought Tesla this year, you have a loss.
Yeah, I mean, you could, but I don't know. I think that, so tax loss selling still has to be outweighed by the fact that most fund managers are still underweight Tesla.
Okay, yeah, I'm just trying to play devil's advocate and see.
Yeah, and I think if you had
what you're saying is all true. So buy it long term, period.
Mm-hmm.
And he's having this trouble with Twitter, blah, blah, blah. Big deal.
Yeah, and I agree. Not only is it not a big deal, but also like the Twitter transaction's done at this point, right? Like, what is it that you think he has to do further as relates to Tesla to impact Twitter? And I got news, and I'll just be on the record for saying it. Elon, if you can't get someone that knows how to monetize Twitter in any kind of meaningful way, just call me. Because if you're like literally call me, I can think of easy ways to monetize Twitter further that haven't been tried yet. And it's just because like right now, Twitter always held itself as this like weird albeit very biased form of news. If you shut down Twitter tomorrow, I guarantee you half the news agencies would have to have a massive contingency plan to try to come up with news because they suck at it relative to just what Twitter reports, even with all the fake news that's on Twitter, right? But more than that, it is still a content of it's still an arm where everybody puts their content on for free, and it barely charges for any kind of data that you might actually have related to that. Like, I'm more than sure, given all the calls that I listened to, they had not even really begun to try to monetize the data that's on Twitter. You know who did that was Facebook, if we're honest. Like all that news flow, did you notice like all the stuff with Facebook that it did to monetize its data? Twitter was clean from all of that. It's crazy. So all you have to do is keep the legal side of monetizing that data, and I bet you could easily get some earnings off of that.
Right, right.
So call me, Elon, is what I'm saying. I give you my number. I don't give everybody my number for the way, by the way. You know, I'm just saying.
Well, I mean, I think what's happening is a lot of the advertisers, I don't know why they're pulling, but sure they're waiting to see, because he's got 120 million followers. Like Audi pulled their ads. So, I mean, it's a wait and see to make sure, you know, there's no hate speech, blah, blah, blah.
Yeah.
Yeah, he's all freedom of speech. But
you are right. Okay. I will give you that. What the advertisers decide to do is what the advertisers decide to do. Let's just ask a simple question. Was Twitter's sales team, and sorry if you work at Twitter and you gotta hate me, it is what it is. I apologize, but let's just be honest. Your sales team wasn't doing a good job. Otherwise, you wouldn't have had that for ad revenue. Do you know what I'm saying? I don't know another way to say it. I'm sorry. I know it's a really hard gig, and total respect. And possibly it was the organization itself that made those salespeople have the difficulties that they had in selling. But kind of is what it is.
yeah, my impression is Twitter did nothing, absolutely zip for a few years. You know, I don't know, they were just sitting there. Whereas Amazon, I mean, Facebook, you're right, they monetize the heck out of it. But
everything they could until they went all the way to the line and then ended up having to talk to Congress about it. Do you know what I mean?
Okay, yeah. Well, Tesla, what we had a price target of 196.50. It got to 196.
Yeah, I took a nibble because at around there, quite frankly, like I think I took a little bit at 197, but that is going into long term, what have you. I have full respect for the day traders and what it is they want to do with it, but I don't know how to, you know, that's not my skill set. Let me say it that way. And it is actually kind of a pain to get Tesla shares at such a discount. I don't know another way to say it. It's on sale. I don't know if there's a Christmas sale for it. You know?
There's no telling how much long term.
Yeah, I mean, I'm definitely doing you know, there's different ways to buy. Some people buy the huge slug altogether. That's never been my style. So I'm like cost averaging down. So if it drops below 197, I'll probably check in with you and Richard and see what the price is that I should put in a limit order on. But that's the challenge with Tesla, is because knowing that right now, for the first time, the reason it's getting clobbered isn't because people think valuation, because anyone that's doing valuation work is full of themselves if they think it's like, you shouldn't listen to any of them. If anyone's giving you a valuation argument, make them justify it. That's what I would say. Make them justify why they think Tesla is worth 30% of its growth rate right now. And then like come back. Do you know what I mean? So given that that's the scenario that you're actually shorting it into, it's very difficult.
Right. Okay.
It's very difficult to think that you're going to get lots of different Christmas sales on this before, but you know, weirder things have happened in this market. So I will do it slowly and methodically.
Okay. If you don't mind, I want to jump to Amazon, because you've been bearish for a long, long time.
I know
90% of the analysts were bullish. I mean,
you know, I know that you're going to short this until for a while. And it's okay. It's just difficult for me here at these levels. Do you know, like when it was much higher, as you know, I was like relentlessly shorting it. I was like, I had like episode after episode, if you Google search, and they're all posted. You know what I mean? So it's not like I could takesy backsy at this point. But like, but here at these levels, my real challenge is I can't get a good view on what actually is happening with the data centers. And a huge component of that is if you look at my Friday episode on Equinix, it came out really strong. The hyperscalers are still, trying to get capacity at the data centers. That's why the rate of, so the occupancy rate is, because Equinix is a REIT, the occupancy rates for the hyperscalers in those locations, they're still very high. Anytime there's more occupancy, one of the hyperscalers, which assumes that it's going to be like one of 5 companies, is taking that capacity. Additionally, Prologis, which does a lot of logistics for a lot of companies, but namely Amazon as well, it's also reporting very strong. And then if eBay and Etsy had both come in like complete disasters, I would have felt better about being like, okay, we're good. But because Etsy actually had a decent quarter, I'm just kind of like, okay, interesting. So I'm not quite ready. And the fourth quarter might actually, for the first time, show profitability in the retail business. So like, even though I think the biggest bang, if you're right, the biggest, you'll get another, like your price will, not only will your price make sense, which is the one where you're shorting it down to, but then even lower prices may make sense because they'd have 3 more quarters before they get a shot at actually making the retailer profitable again. So it's hard for me. I might, closer to time, I might buy a put just to see what happens, but like.
Why do you think retail is going to be profitable? You mean Christmas?
Fourth quarter?
Yeah.
Because it hasn't been as weak as I thought it would have been. I mean, look, we have CPI next week, so we'll see another data point.
Oh, the overall economy. Okay.
Yeah. You still have good employment, which is what all the retailers talked about. And you still have some, like, you don't have a lot of supply because China hasn't opened up yet in its entirety, even though you still have the shortages at docks. So from a consumer's perspective, they actually are buying. And because the jobs number hasn't been ugly, it really, like, you're not going to have, you might still have, because people are so much more prudent and people are more experiential these days, versus that trend for sure. You can see clearly in everything from Livewire, which does the concerts, to every single one of the travel companies. People are purchasing experiences without even blinking. But are they purchasing things for the holiday season? I don't know the answer to that, but I do know that unemployment has been really, really low, and meaning employment has been quite strong. So it makes it scary for me to short Amazon into I give the longest answers for the shortest questions.
Okay. All right. Great, mate. Thank you. We appreciate that.
All right. Any other things that are on your mind? I mean, it's going to be interesting to see how tomorrow's going to be a weird day too, because we won't get the election results till we get the election results.
100% of the time.
Oh yeah. What do you know?
100% of the time after a midterm, the market has been up 1 year from that.
Yeah.
Maybe just 1%, but it's still been up. So
100%.
I think the bias is going to be on the long side for the next year.
My bias is definitely for the long side for the next year.
Right.
I mean, if you look at all the data points lining up, whereas this year it was just volatility galore, next year, most of the data points relate to resolving volatility.
Right.
So a resolved volatility means that businesses can then make the plans. Like right now, almost no company is giving you guidance for 2023 in any meaningful way. Either they're setting it so wide that you could put like, a jet plane through it, not even like a bus, right? like a wide carrier plane through it, because it's just so uncertain from a corporate. If that narrowed up and companies could then do their corporate planning as they typically would, it would really give a lot of lift to the markets, in my opinion.
Yeah, well, you'll have a Republican Congress and a Democratic president, so that means stalemate, right?
Yeah,
which is good. Markets love that.
Markets love a good stalemate.
They cannot screw anything up.
Yeah, yeah. And then you've got Xi Jinping. At some point, he's going to lighten up and continue. The timing of when he lightens is always difficult. I know Goldman came out with a call this morning on China that doesn't look that different from mine. Can you tell? Like, trained a certain way, but
I've been reading a lot about China. It's just this is going to be a great long-term investment.
It really is, because when you really look at how crazy the valuations are, I know that there's all these people. It was so funny because when it first came out, I was like, guys, these VIE structures, you got to be careful. And now all these people are like mouthing me VIE structure, like I don't know what that is. But I'm like, look, we're kind of past the time when you really needed to be concerned about it. Because at this point, at these valuations, given what's happening next for China, like, I think you really have the latest, you really have till Chinese New Year's, and then you will get a very, very notable picture, let's call it that way, in China. Either he's really truly a certain way that people are depicting him in the West, which is divorced from anything that I know about that particular leader, let's call it that way, or you're going to see a very different side of China after Chinese New Year's. I think that it could still look a little bit awkward through Chinese New Year's, because he probably, like, I would be shocked if it's the case right now that the Chinese weren't trying to figure out if one of the major things the Chinese government wasn't discussing right now was whether or not they could let the diaspora come home. Like, I would be shocked if that wasn't a major thing. And if anything, I think if I have, like, more than one of my friends has been able to go back home through the last 6 months since dynamic COVID got put into place, I think as early as April in some provinces, right? But most of them didn't go home because there are a bunch of hoops that you got to jump in order to get there, right? So my suspicion is that he may, like, it'll be interesting to see what he modulates going into Chinese New Year's, because certainly there are a lot of Chinese people that just need to see their families, quite frankly. But then after Chinese New Year's, I could see it being like announcement after announcement of, like, let's open up China, sort of related news, but very, very light and gentle as it goes. That's my suspicion as to how it plays out. And then timing wise, it would imply that if you're trying to do options in particular, you'd need to get a little bit behind, like you're safer. Let's say you're safer behind Chinese New Year's, which is the end of January. But then again, the markets, if it gets win or whiff or any kind of like consideration of it, we'll probably start buying it ahead of that. So you got to figure out your timing on your own, my friends.
Yeah, K-Web is a good ETF. Chinese tech. I don't know.
Yeah, that they've been in that business for so long. That is a good ETF provider for the Chinese markets. I'm a fan of them.
Okay. Thank you, man.
All right, cool. Take care, guys. Make sure to vote.